Now, we've looked through the requirements now twice, understanding the general syllabus areas and also looking at our verbs, so the instruction, and the marking allocation. What we're going to do now in step 4 is start looking at what are the theory marks available. Now, what we're going to see in step 4 is that as we do steps 2 and 3, we should be creating our answer plan. Now, in the P1 exam, there will be some marks available for just explaining theory that you have revised in advance of the exam. In other sections of the requirements, you are going to have to be referring specifically to the scenario, as we have seen. Now, while you're analysing the requirements, so while you're doing steps 2 and 3, you should be preparing your answer plan. And what do I mean by your answer plan? In the answer plan, very simply, you should be noting down the relevant theory which you are going to use in your full answer. You can do your answer plan in the exam booklet. You should do it in your exam booklet, and by approaching things in this way, you are organising your thoughts as you go through the requirements, and you're giving your final answer a clear structure. So what we're going to do now is move into a separate sheet and prepare, or begin to prepare, our answer plan for this question, so you can see what it should look like. So we'll just note at the top of the page then, this is our answer plan. Clearly label. Our first requirement is Part A. Now in Part A, we've been through the requirements now twice. The first thing we saw was that we had to explain the term conflict of interest. So we would just note down in our answer plan, okay, we know what a conflict of interest is. In relation to non-executive directors, of course, we know that NEDs should be independent, or unbiased in their opinions. And what is this conflict of interest? So a conflict of interest arises if they have some other role or connection, perhaps, which may cause them to act contrary to shareholders' interests, so which may cause them to lose their independence. So that was our theory marks then, available in Part A. The next part of Part A was to look at the conflicts of interest in the scenario. We can't fill anything in there until we actually go through the narrative and see what those conflicts are. So what we'll do in our answer plan then is just leave a space on the page, skip down, and start preparing our Part B answer plan. Can you remember what Part B asked us to do? Yep. Part B asked us to assess the advantages of having experienced effective NEDs on the board of KK as it expands rapidly. Now, we've already mentioned we need to put these advantages in the context of the scenario. However, the theory you have learned will help you with building this answer. So if we think about generically, what are the advantages of having NEDs? Then as we go through the scenario, we can add to our points. So why is it good to have NEDs? Well, I hope you're all shouting, because it's independent oversight of our executive directors. the NEDs will ensure that the EDs act in the shareholders' best interests. In addition to that, if we have NEDs on the board, we benefit from their additional skill and experience. Linked to that, we know that our NEDs, of course, should contribute to strategy, so that we know that NEDs will challenge or contribute to the company's strategy, which we would expect then to improve the overall quality of our strategic decisions. And then finally, I would note in at the end, having NEDs on the board will improve investor confidence, really for the reasons we have noted above. So if we have this independent oversight, we have a group ensuring that the EDs act in the shareholders' best interest, if the NEDs are going to improve the overall quality of decisions, all of that is going to improve investor confidence. So we know generally what the advantages of NEDs are. As we go through the scenario, we'll add to this to place these advantages in context. Final part of our answer plan, part C. We need to first of all explain the contents of a best practice corporate governance report in the company's annual report. Now that first bit for 8 marks is just theory. So can you remember what would be included in our corporate governance best practice report? Well, there's a number of different areas. To begin with, we would have a section on information about the board. So details of our board members, as well as frequency of meetings. So frequency of our board meetings. This tells our shareholders, first of all, that the people who are on the board of directors have the experience and the qualifications that you would expect or that they need to run the company. So the details of members will include brief biographies of each member of the board. Then the frequency of meetings indicates to the shareholders, well, how effective are this board? Are they meeting sufficiently regularly? Linked to the board details section, where this would include our performance evaluation information. So, in our disclosures about the Board of Directors' performance evaluation, we would give information about the process which was followed for the performance review, as well as just the high level or key results. Okay, so after information about our board of directors and how they've been performing, we would also have a section for our committee reports. So, at the very least, this will include reports from our remuneration, audit and nomination committee and our risk committee as well, potentially. So our remuneration, nomination, audit committee reports. And in particular, in relation to our remuneration committee, that will include our director remuneration report, very important. And from our audit committee, of course, our internal control report, stating whether or not our internal control system is effective. Then finally, an area we should all be familiar from in our corporate governance best practice report is our accounting and audit section. So this will include information on who is responsible for our company accounts, any information on changes in our accounting standards and how that has affected our reporting. Okay, so that's plenty then on the contents of a corporate governance best practice report. The second bit of this question we are going to have to look at is how will this meet the information needs of Finn Bruin. So again, we'll just leave a space after our theory to add in our scenario references as we go through. Now, so that is our answer plan for this particular question. We're now ready to move in to the next step, step 5, which is to go through the narrative.